What's going on, everybody? It's Tas here. So the markets were red today. We had the S&P 500 down 0.7%. The Dow went down 0.5%. We had the Russell 2000 down 1.2%. And the NASDAQ 100 went down 0.8%. So today, we're going to be breaking down some technicals, going over stocks to buy now. And I also want to share with you guys my thoughts on the market and what I'm doing here, as we are still pretty overinflated, let's be honest. So if you guys find value, hit the like button, subscribe. Make sure to go down below, get 2 stocks from WeBull. Those are valued up to $1,600. Join the Discord chat, join the Facebook group, and get 30 bucks from M1 Finance. All of those are free. Link down below. And you guys can check out my Patreon if you want to support the channel a bit further. And of course, you get exclusive perks on that. So check that out. Linked right down below. And let's get right into the video. So overall, SPY today, like we said, went down, right? The S&P went down, and SPY in particular, which tracks the S&P 500, it is an ETF that tracks that, right? We can see we closed under 418, and like I warned in the previous couple of videos here, guys, 418 is such a big level on SPY, and the fact that we failed at that point, we closed under it, and now we're actually falling a bit after hours, just a little bit. You guys can see that right here. We tried pumping at first after hours. Now we're selling off the past 30-40 minutes prior to me filming this video. So we're seeing resistance at 418, which is that resistance stemming back from, if I pull up this 10-day chart, you can see it all the way back from the middle of April, and I'm saying all the way back like that was years ago. It was only about 2 weeks ago we failed at 418 there, and about 1 week ago again at 418. So it's not a good sign we're trading under that. And on top of all that, right, we're still in a downtrend here based on this 5-day 5-minute chart. You guys can see we actually, if I zoom in a bit, we failed literally every time at a lower high here throughout the day today, pre-market as well, and after market hours yesterday. So the downtrend over the past day and a half is still intact, and until we break out of this, guys, it's not going to be too good for the bulls. In fact, if we break under 416 as well, I mean, we already broke 418. If we break 416 now, that is where I think there could be some more slippage in these markets. Maybe we end up going down. Look, 416.50, we break that. Let's say we start going down towards 410, maybe 411. That is where we were back in the end, towards the end of this month, about a week ago, really 10 days ago, on the 19th, 20th, 21st, 22nd. So watch out for that next week, guys. That's what I'm looking at, because if that does happen, that means there's about 1.5% more downside from where we are now, and that's about $5-6 when it comes to SPY. So watch out for that for this ETF here. And QQQ, which tracks the NASDAQ 100, you guys can see this is also, I mean, you could argue it is holding the uptrend. Look at this. If I remove this drawing, you can see, yes, it is holding the uptrend. Same with SPY. I didn't mention that. I mean, overall, on the hourly chart, SPY is still holding the uptrend, right? So the bulls are still in charge on a macro level when it comes to the hourly chart, at least. But if we look at the nitty-gritty again, the past 2 days, there's still some, headway there for the bulls. And same with QQQ, right? We're seeing headway here on the 5-day 5-minute as well. If I just redraw this, let me just clear the set and redraw it. Look at this, right? We're failing at these points at 338, 339, 340, all at lower highs, and we are maintaining 337, which is good. But the second we break 337, guys, I think QQQ is going to break the uptrend at that point, because look, if I redraw the uptrend, you can see it's holding that at 337. So at that point in time, we might end up filling the gap down to 334. That's about $2-3 under from where we are now, or about 0.8%. Then if 334 fails to hold, then we might go 330, 325, and ultimately 330 is a big level of support. We already said this in a previous video, and that's right around the 180 SMA here on the 4-hour chart. So things are maybe setting up right now for a pullback, not to mention the bearish divergence we're seeing both on QQQ here. I mean, look at the RSI. This is a pretty nasty looking divergence, right? So we're seeing a bearish divergence on QQQ and on SPY. that could signal some selling coming. So be careful, guys. And obviously, the way to mitigate against this is not to be fully in the markets. And I'm not a financial analyst. You guys know this, or a financial advisor, rather. I guess I am kind of a financial analyst, but not an advisor to you, because you must always do your own research. And I'm looking at this, and I always tell myself this, and of course, I talk about my opinion here on YouTube, but I'm like, it's not a good idea to always be fully in the markets. I think it's a good idea, especially when we're at highs like this, to have a little cash, maybe 10%, 20%, 30%. It's all relative. And for me, guys, I'm at about 20%, 25% cash right now, and that's a comfortable spot, because if we end up dumping off to those bottom target levels I mentioned, we'll have cash. We'll be able to buy dips in stocks that go down a lot lower than what the market drops. Because let's say I want to buy Snapchat or something, and since it's more volatile than the S&P 500, Snapchat might drop 10% if the S&P were to go down 1 or 2%. So you guys get the point there. You know, I want to have some cash, and I think it's always a good idea to do so. And that's kind of some thoughts, and I'd love to know what you think down below in the comments. Make sure to smash that like button if you guys are enjoying the video, and subscribe to the channel. I'm thinking about doing a giveaway at 25,000 subscribers, so subscribe to the channel, and I'm thinking about a prize or something we can do, and this is something I'm going to have to think about over the weekend, so make sure to do that. And let's start talking about some stocks here. Skyworks Solutions, SWKS, and first and foremost, guys, Bitcoin today. Before we even talk about stocks, and this is not a Bitcoin channel by any stretch of the imagination, but Bitcoin today was on fire. Crypto in general was on fire. We had Mara go up 7.8%. Now that I'm looking at it, or 7.3% actually. This is spiking back up, so this could be a play now. You know, it's above the 50 moving average. If it breaks the 180 moving average here at about 40, I think Mara could end up filling the gap back up to about $50. You know, we had Riot do well today, up 4%. GBTC, which tracks Bitcoin, it's the Bitcoin Investment Trust. This went up 9% today. So these are doing well because Bitcoin's up a ton. I believe Bitcoin itself is up to about 57,000 last time I checked. And if you guys are watching this, it could be well above that, under that, who knows? It's very volatile. And if you guys actually want 10 bucks from Bitcoin, or of Bitcoin from Coinbase, that's linked down below. Check out my referral link. If you use that, deposit $100 or transact $100, we each get $10 free of Bitcoin. And let's get into some stocks now that are not Bitcoin related. One of them is Skyworks Solutions, right? SWKS, and this went down about 8% today, 8.3% to be exact, and it's down $23, more like $24 from its all-time high here at about 205. It's down 12% from that point, so it's in correction territory. You guys know anything above 10%, well, anything between 10% and 20% of a drop, that is considered a correction. Anything above 20% is considered a bear market, so we're not in a bear market yet, but we are in correction territory. And as of now, look, the uptrend is still intact. We're still holding the 180 moving average here on the 4-hour chart at a higher low at $180. And until we break this, it's still going to remain that way. So let's say, for example, on Monday we woke up and this was gapping up and we were at 185, 187. That would be a good sign that the uptrend is continuing. And maybe in this case, since they just reported earnings and the stock dropped aggressively after earnings, and I was reading and a lot of people were saying it's because of their outlook. It didn't really impress. So the stock dropped. One thing that could happen is we might see some consolidation for a little bit. We might have to wait till the dust settled. And once that were to happen, then we started to see a gap up, maybe to the high mid 180s. That would be a good sign that this could be a snapback play and a continuation play when it comes to the overall uptrend continuing, right? So Skyworks, they just did earnings. They beat EPS, or they just had their earnings. They beat estimates by 2 cents a share with quarterly earnings of $2.37, and they did revenue of $1.17 billion. That was up 53% year over year. So not too bad in those metrics, but again, we saw the outlook. It didn't necessarily impress Wall Street analysts out there. So the stock is tanking, and I'm going to be watching this again. If it holds 180, this could be a nice play. But the second it breaks 180, we might see some more short-term selling, and ultimately I think it could snap back at some point. Obviously, a lot of stocks, they do end up snapping back. The question is, when will it snap back? Nobody knows that, but I think it will ultimately. So we'll watch this one closely. I'll put an alert at $185. We'll see what happens there, and I'll probably put two alerts. One that's mark is at or above 185, so if it breaks above 185, this will alert me, and I'll set one that's the opposite. Take a look at this. We're going to do mark is at or below 178. So this will alert me if Skyworks drops under 178. There could be, like I said, short-term downside in that case, maybe to the low 170s, which would be an even better dip buy, at least in my eyes. So that is Skyworks Solutions there. ExxonMobil, they reported earnings today as well. They did EPS of 65 cents versus 59 cents estimated, and revenue came in at $59.15 billion versus $54.6 billion estimated, so a nice double beat for ExxonMobil. The stock was up initially. If you guys were in my Patreon this morning, we actually covered this morning. This was up initially to about $59. It was at about $58.80 at one point, right? And then it sold off all throughout the day, down to about $57 flat. It went down almost 3% on the day. And I believe this is not going to last. I think oil, I'm still bullish on oil in the very short term, the price, and especially looking 6, 12, 18 months out. I think oil's going higher, so I think this dip in ExxonMobil, which is an energy oil company, right? I think this dip is going to be short-lived. Sure, it could go to 55 again, maybe 56, maybe 54 even, and consolidate there. But ultimately, I think Exxon's going much higher. I think it's going to go above $60, $65. That's where I think it's going, and I'm not telling you to buy it. This is what I believe. In fact, I own shares in the mid to low. Well, I bought some in the low 40s, mid 40s, high 40s, so my average cost is right around mid to high 40s now. And I own at that point, right? And I'm bullish, and I'm still holding on to my shares and reaping the reward of the dividends as well. So I'm bullish. I think crude oil is going a lot higher. You guys can see here, /CL. This is looking very bullish in my eyes too. We sold off for about a month and a half, and ever since the middle of April, we've been ripping back up. You guys can see we just hit a higher high in the uptrend literally yesterday. That was at 65.30. Now we're at 63.50, holding a higher low. So I think this could fill the gap to about $68. No problem. That is the level from back in the beginning of March, or rather the resistance level from back in the beginning of March. So I'm watching Exxon, crude oil. Tesla is another one which I'm looking at heavily here as a trade. I mean, I'm already in it, right? So I have money in this as a trade already. And of course, I'm watching it closely to see what I'm going to do, because if you guys recall, I've been buying Tesla for a while. This whole dip down I bought. My last buy was at 610, and I actually locked in some profits about, what was this? Almost 2 weeks ago now, a little over 2 weeks ago. I locked in profits at 745 on some of my position, and I didn't lock any more on that pump to 780. I wrote it down to where it got to about 660. Now we're above 700. So if it breaks out again, guys, and tests 780, high 700s, 800s, that's probably where I start selling out a little bit of the rest of my position, right? And by the looks of it, I like the way it held a higher low today. Look at that, right around 665. That's a good sign. And now we just need to break this 10-day downtrend. Look at this, the 10-day downtrend. If this breaks at about 715, right around the 180 SMA here on this chart, this is going to fly, in my opinion, to the point where 750 is very possible, 775 is very possible. So I'm going to set an alert. Mark is at or above 715 here on Tesla. And who knows, I might even add more to this position on the momentum. So we're going to watch Tesla closely. Netflix is another one. NFLX. Look at this candlestick today, guys. Pretty nice price action here in a red market. We got a nice pop from 503 pre-market, closed at 513, so a nice $10 move there, but we only did go up $4 on the day because we closed at about, what was that, 508 yesterday or something. So That ended up gapping down initially pre-market, but we did recover a lot and had a green day today. And overall, I think Tesla, or Netflix rather, my head's still on Tesla, guys. Netflix here, if you look on the 10-day chart, we had our consolidation phase after that earnings drop, like I said we would, right? I said let the dust settle. It's gonna be down a little bit, but once it starts pushing up, I think it's gonna go right back to the mid 500s. It's gonna reprice itself, and it looks like that is what it's doing. You know, it held 500 today, ran up all the way to 515. Now look, 515 has been a resistance, so you could argue, yes, we have done this before. We ran a 515 a couple days ago. We failed. A couple days before that, we did it again. We failed. So I think 515 needs to break, and that goes back to that 4-hour chart. You guys can see 515 is right around the 50 SMA here on the 4-hour chart. So if 515 breaks, look, that's going to be the point where, okay, mid 520s, 530, that's going to be the next spot. Considering 530 was resistance back in the middle of March, also back in December, November. So that's the next big move here on Netflix, 515 to 530, followed by 560 to about $565 per share. Those are my thoughts, at least. And of course, I'd love to know yours down below in the comments, as always. And if you don't agree with me, please let me know down below. I'd love to know. You know, I don't want to be around a bunch of yes men. I want people to tell me if I'm wrong, or, you know, combat my argument or whatever. Just drop a comment down below. Let's chit chat down there. And AMD is another one. It went down 2.7%. And this one, unlike Netflix, which Netflix didn't do well with earnings, AMD did well. It was a nice quarter for AMD. I believe their guidance was good as well. The stock went from $85 all the way to almost $90, and now we're all the way back down to the low 80s. We've dropped about $8, right? About 9% from that high right around those earnings. And I feel like this is overblown. I think this sell-off is very overblown. I feel like AMD should have held 85. So at this point in time, I'm in AMD at 76. I mean, I've mentioned that before, and I'm looking to add more at this point. I feel like this dip is a blessing in disguise. You know, if we hold 80 right around this higher low point on the 4-hour chart, and you guys can see it on the hourly chart as well. If we just hold the uptrend here at 80.81 and we rip back up to 90, guys, that's an 8 to 10% gain. So I think AMD, very overblown. This is a nice dip buy, and if it goes into the 70s again, that's even better. I'm going to buy that up even more. So that is AMD. I'm watching it. CL, Colgate, Palmolive, they did EPS of 80 cents versus 79 cents, and revenue came in at $4.34 billion versus $4.25 billion estimated. So a pretty solid double beat there for Colgate, and the stock is facing a big resistance point, $81. I mean, this has been a sticking point, and really this whole year of 2021, that's been a sticking point. And you guys can see the inverse head and shoulder forming here, left shoulder, head, right shoulder. And now with this earnings report, that was pretty solid. You know, the stock went up 1.1%. I believe this could ultimately break $81, and the right shoulder could complete anywhere from $83, $84, maybe even $85 per share. So those are some quick thoughts on Colgate, Palmolive. And the last stock for today, drum roll please. Okay, that's probably unnecessary. The last one is Microsoft, guys. MSFT. This one is beaten down too aggressively as well, I'd say. It's down 5% from that high, and it's right around the 180 moving average on the 4-hour chart, and it looks like as of today, it seems like we are holding that old resistance from all of February as a support right around 245, 250. So as long as this could hold, I feel like Microsoft could be a decent dip buy, maybe back up to about 260. That could be a nice play of about 4%. And on the 5-day chart, look at this. We must break the downtrend on the 5-day chart. So I'd say watch for 254. I'm going to put an alert right there. If 254 can break, maybe we see some upside push back to 263, which again is about a 3 to 4% move from where we are right now. And let's say we fail to hold 245, 250, which could very well happen if the broader markets sell off. We end up going at 230, you know, 225. That could be a dip buy as well if we look on the hourly chart. That would be an overall support right around the 180 SMA here on the yearly chart. So those are some stocks, guys. I hope you all enjoyed the video, and those are some thoughts on the markets in general. Let me know yours down below in the comment section. And if you all enjoyed the video, hit the like button, subscribe, make sure to go down below, get 2 stocks from WeBull. Those are valued up to $1,600. All you have to do is use my link, deposit $100, and we each get 2 free stocks, and you can get $30 from M1 Finance by also depositing $100. We each get $30 from them, and you can check out my Patreon at patreon.com/DotsUrFest. That's also linked down below if you all want buy and sell alerts, call outs, morning update videos, and more access to me. That is all on Patreon, again at patreon.com/DotsUrFest. So I'll catch you all in the next video, which, oh, by the way, I almost forgot to mention, I made a Neo video earlier going over their earnings. If you missed that, I'll link it right up here. Click that. It's right here. Or I'll link it down below as well. Either or, just click that and watch that video. It's a must watch. That's a stock I actually bought more of today. So I'll see you guys there. Thanks for watching again. As always, peace out.